Okay, so let's understand the solution. First of all, we will begin with the five type of accounts that will be applicable throughout the accounting. Okay, first is assets. Okay, the assets are recoverable amounts. Let's say suppose you have a business and you have sold some goods or services to your customer, but the customer is saying right now that he will be paying after a certain period of time. Let's say around 30 days. Okay, so that amount will become automatically recoverable. Okay, after the certain period of time, so that amount will be included in assets. Okay, cash and bank balance. If you will receive that amount from your customer, so that so you will be maintaining that cash balance at your entity in your cash drawer or any type of locker. Okay, so that will also become your assets. Inventory, however, in traditional terms we used to term or we used to know supplies as inventory. And inventory is nothing but the material you have purchased from your supplier for further processing of for further processing into finished goods, so that you can you can sell those finished goods to your customer. Okay, let's come to liabilities. Liabilities are mostly in contrast of assets. Payable amount. So as just we have discussed inventory, like suppose you have purchased some inventory from your supplier but you have not paid for them, so that amount becomes payable. Okay, if that amount becomes payable, so that is considered as your liability. You have to pay off that liability after a certain period of time. Okay, short and long term debt, that you like or you take loan from the bank to finance your different type of needs or wants based on, let's say example of purchasing house, purchasing property, purchasing car, motorbike, or any type of need you want. Okay, short and long term loans. Then come to capital. What are capital? Equity share capital. We will discuss in more detail when we will face much advanced problem related to this. PSC, you can write it down, full form of PSC, preference share capital, in your notebook, so that it will be easy for you to revise these terms just before the exams. Okay, so the capital is a term which we use to record the transactions related to financing for the business. Okay, now there are expenses. Okay, and I think everyone will be familiar with the expenses. So okay, the expenses which are incurred to earn the profit, or which are incurred to run the business, but no personal nature or no personal expenses are allowed. Like you cannot say that you are going to consider personal expenses in your profit and loss statement of the business. Okay, so that should not be the case. Now revenue. if you are into if you are into business of selling goods or services to someone else, to your customer, okay, in most of the cases. So you will generate your revenue through selling the goods and services to your customer, either through cash sale or debtor sale, like receiving the amount after later point in time. So that will become your sales. We can also have other income. Okay, so these are the five type of accounts against which sorry, against which I have stated the terms, very relevant to them as of now, for deriving the solution for the current problem. However, I will also like to say, or I would also like to introduce some different components of five type of accounts. First of all, now let's talk about the balances, that how the different type of accounts have balances in most of the cases. Okay, so asset and expenses generally, very generally, means in most of the cases, in 99% of the cases, 99% of the cases will be having debit balances. You will get to know about what is the actual meaning of debit balances while we will be moving to advanced problems, because unless and otherwise it will not be much clearer to you. But as a matter of the basis for the current solution, you can remember this is very simple. Nothing to worry about it. Revenue, capital, and liabilities will generally have credit balances. Is that thing clear? So what is our question says? Which of the following accounts will have a debit balance? Okay. So as we have just understood that the supplies or the inventory will be considered as an asset. Eh? Okay. So we also know what is the meaning of inventory. Now, conf- as per these rules, the asset will have generally a debit balance. So now we can we can derive our solution based on the analysis, or based on the material we have just jotted down. Okay, the correct choice for problem 33 is C. Okay, so that's all for the solution. Please make sure that you will write or you will jot down in your notebook the first sheet, as well as the second sheet. Third sheet is not needed to be write it down. Okay, I'm asking you to write down the first and second sheet, because that in most of the cases, whenever you will have exams, so before 5 to 10 days back before that, you need to revise all this. Okay, that's all for the solution. Thank you.